in the shadowed corridors of global energy markets, where fortunes are forged in silence and cataclysms brew beneath the surface calm. A new empire is rising, one built not on oil or gas, but on the glowing heart of the atom itself. Imagine a world where the insatiable hunger of artificial intelligence, that digital leviathan reshaping our reality, collides with the finite limits of our planet's power grid, sparking a clandestine race for a resource long forgotten in the annals of the Cold War. Uranium, the fuel of nuclear dreams and nightmares, is being hoarded in unprecedented volumes by invisible titans, their identities shrouded in corporate secrecy and geopolitical intrigue. This isn't the noisy speculation of retail traders chasing quick profits. This is a forensic battlefield where megacorporations, driven by the existential threat of an energy blackout, are devouring supplies to power the AI revolution. As the charts show a deceptive stillness in uranium prices hovering around the mid-70s per pound, the real story unfolds in the depths of trading volumes and off-market deals, a shadow empire accumulating, the raw essence of tomorrow's power, leaving the world teetering on the brink of a supply apocalypse that could redefine wealth, security, and survival in the 21st century. To grasp the magnitude of this hidden war, we must first peel back the layers of deception that cloak the uranium market, a realm where surface appearances belie the furious undercurrents of strategic maneuvering. For months now, as of this December 2025, the spot price of uranium has lingered stubbornly between $75 and $80 per pound, a range that to the untrained eye suggests stagnation, perhaps even a fading bull run after the spikes of earlier years. Traders glance at the charts and see boredom, a commodity caught in the doldrums, overshadowed by the flashier surges in copper or lithium. But delve into the data, the forensic footprints left in exchange volumes and inventory reports, and a different narrative emerges, one of relentless absorption, where billions of dollars are funneling into quiet acquisitions that refuse to budge the price upward. This is no accident. It's the hallmark of smart money at work, employing sophisticated tools, like iceberg orders and dark pool transactions to mask their intent. Picture it. A massive buyer places a visible bid for a mere fraction of their true appetite, say a few £1,000s, while concealing an order for millions more beneath the surface. Sellers hit the bid, the algorithm reloads invisibly, and the price holds firm, pinned like a butterfly under glass. Yet the volume churns wildly, spiking to levels unseen since the nuclear renaissance whispers of the early 2000s. Over the past quarter alone, estimates from market analysts at firms like Sprott and the World Nuclear Association point to an absorption of upwards of 50 million pounds of uranium equivalent, enough to fuel dozens of reactors for years without a single dramatic price swing. This isn't retail frenzy or hedge fund gambling. It's the calculated accumulation of entities with horizons stretching decades. Entities for whom uranium isn't a trade but a lifeline. And as we trace these shadows, the trail leads inexorably to the beating heart of the tech world, where AI's voracious power demands are forcing giants like Microsoft, Google, and Amazon to become the new nuclear barons, building empires in the dark to ensure their digital dominance doesn't flicker out. But why uranium and why now? In this era of solar panels and wind turbines blanketing the landscape? To understand the desperation fueling this shadow empire, we must confront the stark arithmetic of the AI energy crisis, a ticking bomb that threatens to derail the very technological utopia these companies are constructing. Artificial intelligence, once a niche pursuit in academic labs, has exploded into a trillion-dollar juggernaut, with models like GPT-5 and beyond devouring computational resources at an exponential rate. A single AI query, the kind that powers your chatbot conversation or image generation, consumes 10 to 30 times the electricity of a traditional Google search, translating to watt-hours that stack up like dominoes in a chain reaction. Multiply that by billions of daily interactions, and the projections become apocalyptic. By 2030, data centers alone could account for 8% of global electricity demand, rivaling entire nations like Japan or Germany. The existing grid, a patchwork of aging infrastructure, strained by electrification trends in EVs and heat pumps, simply cannot cope. Renewables, for all their promise, falter under the weight of intermittency. Solar dims at night. Wine stalls in calm and batteries, while advancing, remain prohibitively expensive at the gigawatt scale required for 24/7. Baseload power. Enter nuclear energy, the sleeping giant of clean power, capable of delivering relentless, carbon-free electricity with a fuel density unmatched by any other source. 1 pound of enriched uranium packs the energy punch of over 1 million pounds of coal, making it the perfect antidote to AI's power thirst. Yet, as tech behemoths pivot to this solution, they've uncovered a fatal flaw: the uranium supply chain, dormant for decades after Chernobyl and Fukushima chilled global enthusiasm, is woefully unprepared for the surge. Mines shuttered, enrichment facilities mothballed, and geopolitical tensions from Russia's dominance in conversion to Kazakhstan's export, uncertainties have created a perfect storm of scarcity. This is where the shadow buyers emerge, not as speculators, but as strategic hoarders securing their future, forging deals that bypass public markets and reshape the global energy landscape in ways that echo the oil cartels of the 20th century. As we embark on this forensic hunt, piecing together the clues, like detectives in a high-stakes thriller, the evidence mounts that the primary architects of this uranium shadow empire are none, other than the AI hyperscalers themselves, Microsoft, Google, Amazon, and their ilk, whose public commitments to net zero emissions mask a frantic scramble for nuclear supremacy. Let's start with the timelines, those chronological breadcrumbs that reveal intent before action. In the waning months of 2024, Microsoft stunned the world by inking a 20-year power purchase agreement with Constellation Energy to revive the shuttered Unit 1 reactor at 3 Mile Island, the infamous site of America's worst nuclear incident, renaming it the Crane Clean Energy Center in a bold rebranding of history. This wasn't a whim. It was a calculated strike to secure 835 megawatts of baseload power exclusively from Microsoft's data centers, enough to illuminate a city the size of Philadelphia, while training AI models that could outthink humanity. Not to be outdone, Google followed suit in early 2025 with a groundbreaking deal alongside Kairos Power, committing to purchase up to 500 megawatts from small modular reactors, SMRs, slated for deployment by 2030, the first corporate pact of its kind explicitly tied to AI infrastructure. Amazon, ever the logistics maestro, layered on with multiple agreements, a $650 million acquisition of a nuclear-adjacent data center campus in Pennsylvania from Talon Energy, plus partnerships with Dominion Energy and Energy Northwest to develop SMRs capable of delivering gigawatts directly to their cloud empire. These aren't isolated bets. They're a coordinated offensive backed by over $100 billion in combined AI infrastructure spending for 2025 alone, as reported by Bloomberg Nef. But the forensic smoking gun lies in the market data, uranium futures contracts, spiking in off-hours trading during Asian and European sessions, physical premiums widening in key hubs like Shanghai and Toronto, and a decoupling of uranium prices from traditional commodities like gold, instead sinking with AI stocks and electrification baskets. This isn't bank short covering or speculative froth. Banks roll contracts, they don't take delivery. These buyers are stripping physical uranium from the system, building dark inventories in private vaults across Nevada, Washington, and beyond, stockpiles that vanish from COMEX reports, creating an illusion of abundance while the real supply tightens like a noose. Diving deeper into the why, beyond the raw numbers, we uncover the emotional underbelly of this crisis, the fear that grips boardrooms in Silicon Valley, where the promise of AI godhood teeters on the edge of an energy abyss. These tech titans, once cavalier about power as an infinite utility, now face an existential reckoning. Without reliable electricity, their data centers become billion-dollar paperweights, their AI ambitions reduced to flickering screens in the dark. Microsoft's Satya Nadella has publicly lamented the grid's fragility, while Google's Sundar Pichai has championed SMRs as the holy grail for sustainable scaling. Amazon's AWS, powering a third of the internet, projects internal models showing AI workloads tripling energy needs by 2028, a multiplier effect amplified by the Jevons paradox. Efficiency gains and algorithms only spur more usage, not less. Net zero pledges made in the glow of ESG glory. Now bind them like chains. Coal and gas are PR poison. Nuclear the only scalable escape. But here's the twist that heightens the suspense, the uranium market's razor-thin margins. Global mine supply hovers at 140 million pounds annually, per the World Nuclear Association, yet reactor demand, bolstered by extensions in the US, new builds in China, and AI-driven additions, is forecasted to hit 200 million by 2030. The gap, filled by secondary sources like Russian stockpiles, but with sanctions biting and Kazakhstan's floods disrupting output, the shadow buyers are front-running the shortage. They're not squeezing for profit. To them, $100 uranium is chump change compared to a stalled data center. This is vertical integration reborn, akin to Elon Musk's Tesla securing lithium refineries, tech giants morphing into energy sovereigns, amassing uranium not to trade, but to consume, ensuring their AI brains pulse uninterrupted, while competitors scramble in the blackout. Yet, as this shadow empire consolidates its grip, the ripples extend far beyond server farms, triggering collateral damage that echoes through industries and nations, evoking a profound sense of unease about the unequal future we're hurtling toward. Consider the zero-sum brutality of uranium allocation. With annual production capped, every pound snapped up by tech whales means one less for traditional users. Utilities, those steadfast guardians of the grid, now compete with billionaires for fuel rods, driving up costs that cascade to household bills. Imagine your electricity rate spiking 20% because ChatGPT needs to ponder existential queries. The military-industrial complex feels the pinch too. Uranium's enriched form powers submarines and aircraft carriers, essential for national security in a world of rising tensions. The Pentagon's Defense Logistics Agency, already invoking priority acts for rare earths, could see supplies pitting Uncle Sam against silicon. Valley in a bidding war that inflates prices exponentially. Medical sectors suffer silently, uranium isotopes, fuel cancer treatments and diagnostic scans, inelastic demands where shortages mean lives lost, not profits forgone. And globally, emerging economies like India and Brazil, banking on nuclear for clean growth, find themselves crowded out, exacerbating energy inequality. This isn't mere economics. It's a moral quandary, where AI's glittering promise devours resources from the vulnerable, stirring emotions of injustice and urgency. The whales count on scrap cycles, old warheads demilitarized, inventories liquidated, but these are finite. Slow to mobilize, creating mismatches that propel prices into overshoot territory, potentially doubling or tripling in months. For the individual investor, caught in this maelstrom, the key lies not in fighting the tide, but in drafting behind these colossal forces, positioning oneself to ride the wave without being crushed beneath it. Don't mistake the current price calm for complacency. It's the coiling spring before the launch. As the shadow buyers fill their vaults, watch for telltale signs. Volume spikes on flat prices, widening physical premiums, and sector rotations, where uranium ETFs like Uranium sync with Nvidia's surges. Your strategy? Accumulate patiently at these levels, mirroring the whales, buy dips in the $70 range, set stops just below support to exit if the empire crumbles. But hold through the boredom, for that's their greatest weapon, lulling you into selling what they crave. Diversify into producers like Cameco or explorers in stable jurisdictions like Canada, avoiding geopolitical pitfalls. Emotionally, steel yourself against the highs. When prices gap to 90, the reptilian brain screams, sell. But remember, this is a super cycle, measured in years, not quarters. The whales aren't flipping, they're fortifying fortresses. By aligning with them, you transform from spectator to stakeholder in the nuclear renaissance, safeguarding wealth against the inflation and scarcity that AI unwittingly unleashes. As we approach the climax of this investigation, the vacuum above current prices looms like a chasm, ready to swallow shorts and propel uranium into uncharted territories. Once the shadow buyers satiate their hunger, estimates suggest their programs culminate in early 2026. The artificial floors vanish, unleashing pent-up demand in a markup phase of biblical proportions. Historical volume profiles reveal air pockets above $85, regions where price blasted through in 2007s. Bull run, but left no lingering sellers. A mere fraction of the buying force at 70 could catapult us to 100, then 120 as liquidity evaporates. Banks, aware of the trap, may orchestrate one final shakeout, a sharp dip to 65 on low volume, flushing weak hands before the ascent. Stay vigilant. If it drops without conviction, it's the head fake, the engine revving. The emotional crescendo builds here. The thrill of vindication as charts explode, media decrying bubbles, while fundamentals scream scarcity. But hold fast. Selling early trades a strategic asset for depreciating fiat, a mistake the whales avoid. In the end, this shadow empire of uranium buyers isn't just a market anomaly. It's the harbinger of a new world order, where AI's power hunger rewrites the rules of energy, economy, and equity. We've traced the forensic trails from flat charts to tech boardrooms, connected the dots of desperation and dominance, and glimpsed the fallout for humanity. As prices inevitably erupt, remember, you're not merely investing, you're claiming a stake in the atomic age reborn. The hunt concludes, but the empire endures. Hold the line, for in this game of shadows, light awaits those who endure the dark. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories. And leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.